What do you make of those numbers?
So it's a weird one, isn't it? Because objectively, a rise in inflation shouldn't be good news. But when we look at it, we're looking at relative to forecasts. And as you said there, we undershot both our expectation, the Bank of England's expectations. So on a headline basis, I'd say
it's still a high number, though, isn't it? And I think that's the point you're making, maybe.
Yeah, I mean, 2.2. It's not
above target.
It's above target. It's not going to. I mean, we're not at 11% anymore.
No,
clearly. So it's not. It's not going to cause big worries at the Bank of England. I think the key point is around services inflation.
That's really, the point I'm making. Yeah.
And you're right. That is still high at 5.2. That is still high. And actually, interestingly, a lot of the fall from 5.7 was a lot to do with what the Bank of England likes to call volatile categories. So there's a bit of a story there about how good news this print really is. So if you strip out things like the Taylor Swift effect that we had in June, that's reversed this time. Airfares and all the bits that are a little bit more volatile month to month, actually it looks a little bit more stubborn. So I think it keeps them on for cutting more for the rest of the year. How far they'll go, I'm not yet convinced that two more cuts is right. I think one is more likely.
You're not convinced? Because September hadn't really been in play for these markets up until today. And now, look, it's not base case, but it's starting to get traction, the idea that they could go in September. Prior to the data out today, it was November, and possibly 44 basis points by the end of the year.
Yes, that's right.
Now you're above that, and September's in play. So what holds them back from doing two?
I think it's that services print. I mean, if we get another CPI before the bank meets in September, so if we get a big downside surprise there, the probability would go up again, clearly. I think the other thing to remember about this is what happens over at the Fed. So the Fed meets the day before, or the decision is announced the day before, I should say, the bank meets. If Powell flags that there's a problem with the jobs market, they go 50, I think that would really raise the prospect of the bank moving in September. And it would be about putting in some precaution into the policy stance. It wouldn't be about the UK economy is falling off a cliff, we're heading for a recession. It would be about the UK economy is a small open economy. What happens in the US matters for the UK. And we're just going to put some insurance in place to be sure that we're not going to sort of fall off a cliff ourselves, if you like. So I think there need to be a few things that happen between now and then. And at the moment, I don't think we're there. At the moment, I think November is still a reasonable base case for the next move.